All right, so picture this. In 2020, I decided to be super innovative and very original, and I wanted to lose weight, okay? So last Monday, I weighed myself, and I was 190 pounds. And I was like, you know what? Hard weekend, lot of wine, too much food. Now it's time to go back to shakes, start a training camp, and let's do it, right? So on Wednesday, I weighed myself again. And I'm at 188. Not incredible, but I mean, losing 2 pounds is better than having 2 pounds more, right? And then on Friday, big celebration. After 5 days of drinking shakes and running, I'm now down to 180 pounds. So 10 pounds lost in a single week. How cool is that, right? So I did all my calculation with all the data I had for 5 days. And by my calculation, at the end of the month, I should be losing 40 pounds. Well, if you think that this is ridiculous, this is pretty much how you look at the market right now. So let's take a look at how much money I lost on my dividend income report for that month and see how the entire stock market will take a few days and make those kind of trends a reality in the mind. Let's roll the intro. Dividend investors, bonjour, this is Mike Hiru, founder of Dividend Stocks Rocks, passionate investor, and a guy that tries to lose weight pretty much year after year, but I'm stuck between 180 and 190 pounds. So as the opposite of the market, I cannot go down and up as I want. This month, it has been crazy on the stock market. You've read tons of articles about the coronavirus and about the oil market bust. So I won't had another video and another page of history on that part. What I'm going to tell you is because the market is going up and down all the time, it is important to understand that all the numbers I'm talking about today in this video is as of March 6th, before the market opened, because March 6th was the worst stock market ever. Not really, but most people think that. And actually, it was the 8th largest loss on a single day in the whole stock market history. So it's pretty much a hard record to break. Between my last income report and this income report, I lost about $10,000. Roughly, it's 6.2% of my portfolio. Nothing to very worry about. It's pretty much business as usual. But the thing is, people are starting to make some kind of weird trend. I'm following a few people on Twitter. Obviously, I have about like 9,000 followers. And Jim Bianco, who's actually on top of an investment research business, was posting how many cases we had in terms of the coronavirus between March 2nd and March 5th. So pretty much like in my intro, he was taking like a few days and then pulling out a pattern. And the pattern is that it was growing exponentially. That's the Fibonacci sequence. So basically it's just going more and more and more and more. And on the 6th day, while the panic was there, everybody said, oh, no, it's not. It is growing, but it's not growing exponentially. So all that to say that what's happening right now with the coronavirus is your human brain is wired to find patterns all the time with everything. This is a great mechanism because it allows us to survive, to evolve, and to make sure that we can almost predict things, right? But sometimes when we don't have enough data, that is pretty much doing the opposite. So because people are freaking out, the market is freaking out, and then what's going to really happen because of this whole thing is, one thing is for sure, we're going towards a small recession at the best case scenario, in my opinion. That's quite obvious. Most countries are shutting down lots of their economy on purpose, and I truly understand why they're doing it, and I think that it's a great idea to stop the virus right away, but it will have impact on the economy over the short term. When you think about the airlines, pretty much any companies in tourism, airlines, consumer cyclical, all those companies are going to take a big hit. And now what we had at the beginning of March was the brilliant idea of the OPEC to flood the market with cheap oil. So basically the oil barrel went down big time. They're kind of like trying to kill their the like US and Canadian players where they need the oil barrel to be a lot higher to make money. So basically what they're doing is that they're just opening the faucet a little bit more, because their cost of production in Saudi Arabia is like $3 a barrel. And they can pretty much live very wealthy even if the oil barrel goes down to $30, which is not the case in the US or with the Canadian oil sand. So this is what's happening right now. Obviously, my portfolio as we speak is probably a lot smaller than it was on March 6th before the bell opened, but still on that month, I did a few trades to kind of like trying to improve my portfolio. Not too much because it was not a panic. I'm still 100% invested. What I did actually is I reviewed my 3 largest losers on the Canadian side, which were Andrew Peller, Lassonde Industries, and Magna International. So as you can see on the graph, I'm losing between 8 to 30% for the past 12 months, which is pretty much a good loss on each case. And I decided to let go of Lassonde. The main reason is because I thought, you know, they have a dominant position in the juice industry in Canada. They were acquiring new businesses in the US and thought, you know, they're gonna do well outside of Canada, they're gonna thrive, and they're gonna keep applying the same model. What happened is that they hurt a lot of headwinds. Integration is not going as smoothly as possible. Earnings are getting hurt by also high cost of transportation and so on. So long story short, they had to revise their dividend payment last year. It was not really a dividend cut because it is being said clearly at Lassonde that they aim at a payout ratio of 25%. So basically, if earnings are going up, payouts ratio will stick at 25% and the dividend will go up to match that accordingly. And at the opposite, if earnings are going down, well, there you go, you have a lower dividend. So I'm expecting most likely another dividend cut or a lower dividend payment for 2021. I didn't want to wait more, and I thought, you know what, it's time to get rid of this one and find something better on the stock market. Obviously, my position in Lassonde wasn't that much, so I had to sell a few more shares of, guess what, Apple. And now, it's not because I don't believe in Apple, and it's not because my investment thesis changed in Apple, but Apple is my largest holding across all my accounts. So if I look at my RRSP, my Lira, and my RESP, it's about 13% of my portfolio. That's a bit too much, right? So I thought, you know what, I'm going to just trim down a few shares. It's about like 1% of my portfolio that I'm trimmed. So I just went back from like 13 to 12%. But that was enough for me to combine with the money from Lassonde and buy VF Corporation. VF Corporation is basically a portfolio brand manager. They're managing all kinds of apparel. They have a North Face, Vans. They recently spin off their Wrangler jeans into contour bands. So basically what they do is they acquire brands, always in the apparel industry. They improve it. They make it more profitable, and then they decide if they want to keep it or they just sell it away or make a spin-off. They have been doing that for so many years. They are like proven management over there, and they exactly know what happens. And right now the stock is down more than 20% since the beginning of the year. Why? Well, mostly because they have manufacturing in China. Obviously lots of stores have been closed due to the coronavirus, and lots of people fear that this is not exactly the type of thing that you're going to buy going forward if there's a recession. So it's pretty much a good time to grab a few shares, and now the yield's at 2.5. So it sounds like a pretty good deal. So now let's look at my Canadian portfolio, my new Canadian portfolio actually, where you can see that it is a lot smaller. It's actually $8,000 less than it used to, mostly because the stock market hurt the portfolio and also because I moved Lasson's Canadian dollars into my US account. So that's pretty much the two things that happened there. As for the rest, I'm looking at my portfolio and I'm very happy with it. I have no intention of getting rid of any Canadian stocks. I'm going to hold on to Andrew Peller and Magna International, even though they are losers in my portfolio. Main reason is Andrew Peller, my investment thesis hasn't changed. They are dominant in the wine industry and they will continue to thrive. They have increased their dividend not too long ago as well. So I'm very confident and very comfortable in keeping my shares. And as for Magna International, well, obviously they are suffering from the automobile industry. It's highly cyclical industry. So you just have to be patient. In the meantime, they also increased their dividend. I think was like more than probably 10 or 11% recently. Then again, great company, dominant player. I'm keeping it and I'm just gonna wait. Now moving on to my US portfolio, well, you can see my VF acquisition over there. Now I'm like 100% cash. The stock is, the portfolio is still down 10%. Compared to my last month, it's down like almost $8,000, even if I had it a little bit more money into it. So it's basically a rough month. But what really matters to me is not really that much where I am standing here, because when I look at my portfolio since the beginning of the year, I'm about the same thing as the market. But when I look since the creation of the pension plan portfolio in September 2017, I'm showing a lot better results than what's happening in the market. So that's the first thing. The second thing is, let's move to my dividend income statements here. We see that I've made 365 Canadian dollars in the month of February, which is an increase of 35%. Obviously, it's not a real increase of 35%. It's more in regards to the timing of Lazard. So sometimes it pays on March 1st, sometimes it doesn't pay and pays in February. But overall, the companies that have increased their payout are National Bank by 9%, Royal Bank by 7%, Texas Instrument by 17%, Apple by 5.5%, Hasbro by 7.9%, Starbucks 14% increase. So pretty much all the stocks that paid me a dividend is higher this year versus last year for the month of February. And moving to the last chart that I have here is showing the total number of dividend that I've received so far. I'm now over $7,000, 400, getting close to actually $8,000 in probably like in 2 months. I'll reach that level. And this is what I track. As you can see, it's pretty stable. Each month I'm getting more money than the previous one. And this is what you should be doing when you invest in the stock market, especially when there's such a crazy market over there. And that's what I keep telling my DSR members as well. Stay invested. Make sure that your stocks are going to keep your dividend as is, and best scenarios are going to increase it. And then you're just set. You just have to wait. You know what? The market goes up, the market goes down. And when you put all that into perspective, the market's not that down. It hasn't reached 2018 bottom yet. So we're talking about just losing one amazing year on the stock market, which was 2019. But it's only a year of returns. It's not much. It's not going to put your retirement into jeopardy or anything. So there's nothing to panic here. I'm very happy with my portfolio. I don't intend to do any other trades right now. I just wanted to have VF Corporation for so long. It wasn't my buy list, and I'm super glad I was able to get it. But if you think that there are deals right now in the stock market, there's none. It's always the same thing. The best timing to buy a stock was yesterday. The second best timing is today. And the worst timing is always tomorrow. So if you have money, look at the stock market, do your own due diligence, build yourself a buy list, and start buying. Regardless if you do it today and then the stock market drops by 5% in the next 3 days, it won't matter over the long run. It will only matter if you have a crystal ball telling you that the stock market is going down 5%, which you all know it's not going to happen. So until next video, stay invested.